I've already done everything that I can do. I've identified a higher time frame zone that if we get to that zone, there's a high probability chance that the stock sets up and gives me confirmation to take a trade. I don't know if it's long. I don't know if it's short. I know there's going to be some type of price reaction at that level. And I know with certainty that there's most likely going to be something happening at that level to give me confirmation to take a trade. Right now, I'm thinking shorts, right? Because this would be a crack below that zone, followed by a retest back into that zone as resistance. And so if we get into that zone and we're topping out and we see it rolling on over and we clearly see selling pressure, resistance, and we start rolling on over, that's going to be some great confirmation to get shorts inside of this zone of resistance. Then I want to add some intraday confirmation as well, right? First piece of intraday confirmation would be the crack and the retest. But then we also see we have an uptrend on the SPY as well. Not only do I want to see this crack and retest back into that zone of resistance, top on out, roll on over, and have price action suggest a short, and price action give me confirmation, I want to see a crack at the trend line as well. That gives me 3 separate pieces of confirmation to take a short. Crack in the retest. That would be an intraday setup on a higher time frame zone that we identified. So I feel pretty confident in taking a trade at or near this level, right? Crack and retest, number 1. Number 2, if we start topping out, rolling on over, we have a lot of upper shadows, we could utilize price action and volume for confirmation as well. That could potentially be confirmation number 2 for the trade. And then if we crack the trend line, that's your third piece of confirmation. 3 separate reasons to confirm the trade to the short side. Great. So we have a plan built. We know where we want to get in. We know what we want to see. We have multiple pieces of confirmation. We feel pretty confident that, hey, if this sets up based on our expectations, like we could have possibly a really good trade here. Now let's start gauging where would our entries most likely be, where's our realistic target on the trade, and where's our stop loss. So we know that we're going to get in somewhere inside of the zone, right? Somewhere between, 451.37 and 451.55. So somewhere in that zone. So let's go ahead and just do this. Let's put our entry right in the middle between those two levels and say that's probably where the entry is going to be, give or take by a couple cents, right? How much can we make to the downside? Well, we have room to 450.50. That gives us about 95 cents of reward. Okay. And then honestly, on a crack and retest into strong resistance and cracking the trend line, it's like, how much would you really want to risk? I would say 25 to 30 cents of risk. I think that's plenty, right? So we have nearly a 4-to-1 setup. 4-to-1 setup. Okay. How much can I lose on a trade? I can lose $3,000 if I really wanted to. That's 3%. I don't want to lose $3,000, right? I just don't want to lose 3K. I don't want to lose 2. I don't want to lose 1. My max is 3K, right? But I don't want to lose 3K on this trade today. I'm thinking like $250. Right? I'm cool with $250 of loss. Great. How much can I make? 3.8 times my risk, almost 4 times my risk. Well, if my risk is $250, I have potential to make $1,000. Do I like that potential outcome? Am I cool with losing $250 to make $1,000? Can I accept the reality that if I get in and get stopped out, I'm down $250? If I get in and hit target, I'm up $1,000. Am I okay with that outcome? Yes, I am. So what's the final step in order to fully get prepared on the trade? It's position yourself correctly. So with options, we got to learn how to position ourselves. How do we calculate risk to reward with an option, right? That's the next step. How many contracts do we buy, right? We have 25 cents of risk on the chart. How do we know how many contracts to buy to risk that 25 cents on the chart to not lose any more than 250? We just got to do a little bit of math, right? So I'm going to go with a 40 delta. My delta would be a 40. It doesn't matter if you're trading 0 DTEs or monthly. It doesn't matter. A 40 delta is a 40 delta, okay? And that's for every dollar move that the stock makes is 40. So 0.25, that's 25% of a dollar. So I know that 25 cents of risk is going to be 25% of this delta, right? So what's 25% of 40? It'd be 10. So I know that for every contract I hold at 25 cents of risk on the chart with a 40 delta, I know my risk per contract is $10. Okay? I want to lose $250 max. That means I can buy 25 contracts. 25 contracts times $10 of risk per contract equals $250. So just like that, I know how many contracts I can buy in the trade. 25 contracts at 25 cents of risk with a 40 delta, I'm losing $250. Straightforward stuff. And I know what my risk is. So now I know my reward. 4 to 1. I can make 4 times my risk. I can make $1,000 if I take 25 put contracts with a 40 delta, risking no more than 25 cents on the stock, right? Not 25 cents of the option premium, not 25 cents on the stock, right? Entry, 451.44. Stop, 451.69, right? That's 25 cents. If I get in at that price on the SPY and it goes up 25 cents and I close my position, I know I'm down $250 if I have 25 contracts with a 40 delta. And just like that, as the trade's possibly setting up, as it's developing, I'm sitting here building a plan. I'm getting prepared. So now all I have to do is just wait for confirmation. And if I get confirmation, I know I need to trade options, the delta. I can get no more than 25 of those with my risk to not lose more than $250. I've already accepted the outcome of the trade. I already know the type of confirmation I'm looking for. And now I just have to sit back, be disciplined, and be patient. That's it. That's the hardest part of trading. Like all of this that we just did is super simple. It's not hard. It's just, are you disciplined to do it consistently on every trade? And then once it's done, are you disciplined to sit back on your hands and wait for the trade to actually come to you? That's where traders fuck up, is they're not disciplined to sit back on their hands. Most traders do what? Most traders go through this process, check, and they're ready to go. But then what happens? Something starts to move sooner than later. They're like, oh shit, it's cracking the trend line now. It's not going to come up here. Let's just go ahead and get in here. But they don't even know what their plan looks like getting in here. They built a plan to get in up here, not to get in here. What's your risk reward? How many contracts do you take? I guarantee it's not 25 contracts. I guarantee it's not the same exact 4 to 1 plan that you just built. So that's where a lot of traders fuck up, right? They have a plan built. They're prepared. They're feeling pretty good and feeling pretty confident, right? And then they start to say, I may not get an entry up here. It's cracking here. And they blindly jump in without a plan established. Now, that's when they see inconsistent trades. That's when their accounts don't grow and they blow up accounts. That's what happens. So this is the process of trading. Like you just got to do this all the time, right? Analyze everything, assess your levels, accept your risk ahead of time, build your plans, right? Get positioned, get prepared before the trade even sets up, and then wait. If the trade doesn't come to you and set up based on your plan, it's a no-go. You can't chase the stock right here unless you have another plan built, and if it's a good plan, right? But a lot of traders get caught up in seeing a move before what they were expecting, and they just jump in blindly. What's your risk? They don't know. What's your reward? They don't know. And that's when traders start really seeing a lot of inconsistent results with their profits. So let's be real. If you would have got in right here as it was cracking, your stop should be over that prior swing high, and your target's still your freaking target of 450.50. You got a really good 0.6 to 1 setup. That's fantastic. It's less than a 1 to 1. That would have been a really shitty trade plan, right? And now the stock's bouncing. Now you're red. Now you're kicking yourself in the butt. Now you're mad. Now you're running away, crying because you lost money. It doesn't have to be that hard to trade. You just got to really work on the discipline and the patient aspect.